the Federal Insurance Office, FIO, released data revealing that home insurance rates outpaced inflation by 8.7% nationwide from 2018 to 2022, due in large part to higher climate impacts. The data set reveals that insurer-initiated non-renewals, sort of retreat, above 10 or even 15% were quite common in zip codes scattered across the country, especially in climate-vulnerable hotspots, but rates are rising almost everywhere. In many states and regions, insurer withdrawals and year-over-year doubling premium increases, for example, have resulted in millions of families losing access entirely or being unable to afford adequate coverage. The insurance protection gap is growing at an alarming pace. Though small insurers are more susceptible to failure due to their concentrated risk, we have also seen insurers take advantage of the climate framing to mislead their policyholders and the public. A 2022 report found that insurers in Florida paid their shareholders $680 million in dividends and diverted billions to affiliates, while telling their policyholders and the public that the back-to-back hurricanes Irma and Michael were causing insurers to lose money overall. This type of shell game is not uncommon in the insurance sector. Meanwhile, large insurers are asking for public bailouts, as we saw recently in California, where the Residual Market Consortium of private insurers asked for a special $500 million assessment on families throughout the state. While the insurance system tilts, the Trump administration has decided that now is a good time to attempt to dismantle already underfunded federal disaster preparedness and recovery programs under FEMA, to privatize climate data collection and research, firing hundreds of NOAA staff members, including climate scientists and weather forecasters, and to remove critical climate risk transparency and risk management rules for the financial sector. We know that some of these changes were explicit priorities for the oil and gas sector, who spent nearly $500 million on the 2024 election cycle, but it's worth asking, who else does stripping these protections help? Certainly not the public, who will need to pay even higher insurance premiums if federal disaster resources are pared back.